In the high-speed world of financial markets, every trader is hunting for that edge, that perfect strategy, that unbreakable mindset, amid all the noise and hype. One name keeps popping up in trading communities: Charles Harris. If you're tired of get-rich-quick schemes and want a real, sustainable approach to the markets, you've come to the right place. Today, we're diving deep into the Charles Harris trading philosophy, a strategy built on discipline, structure, and something many traders forget: common sense. Whether you're trading stocks, Forex, or crypto, these lessons are timeless and could completely change your game. So, who is Charles Harris? He's not known for flashy Lamborghinis or screenshots of million-dollar days. Instead, he's recognized for promoting a professional, process-driven approach to trading. The core idea is simple: trading isn't gambling, it's a skill you develop over time. It requires patience, emotional control, and a commitment to continuous learning. This philosophy is a breath of fresh air for traders who are serious about long-term growth, not just short-term thrills. Let's start with the absolute foundation of the Charles Harris trading style. Process comes first. Think about it: the market is inherently unpredictable. No one can guess every single move correctly. So, instead of trying to be a fortune teller, this approach focuses on what you can control. This means defining crystal-clear rules for when you enter a trade and, just as importantly, when you exit. It means accepting that losses are a normal part of the business, not a personal failure. By focusing on executing a well-tested plan over a series of trades, you let probabilities work in your favor. This systematic approach is the key to removing emotion from your decisions, which, as we all know, is one of the biggest reasons traders fail. When you trust your process, you reduce stress and pave the way for consistent, long-term performance. Now for the topic that could single-handedly save your trading account: risk management. If there's one lesson hammered home in discussions about Charles Harris's methods, it's this. So many traders blow up their accounts not because their strategy was bad, but because they bet the farm on a single trade. The principles are straightforward but non-negotiable. First, risk only a tiny percentage of your capital on any one trade. Think 1 or 2%. Second, use a stop-loss order every single time. It's your safety net. Third, avoid over-leveraging. That shiny leverage your broker offers can be a double-edged sword, especially in volatile markets. By making capital protection your #1 priority, you ensure you live to trade another day. It's this conservative, professional mindset that separates the amateurs from the pros. You can have the best strategy in the world, but without solid risk management, you're just driving a race car without brakes. Let's talk about what your charts should look like. In a world full of complex indicators and chaotic screens, the Charles Harris approach champions simplicity. Forget about cramming your charts with dozens of lagging indicators that just tell you what already happened. The focus here is on clean, clear price action. What is the market actually doing right now? The key is to analyze market structure. Are we in an uptrend, a downtrend, or moving sideways? Identify the most obvious support and resistance levels where price has reacted in the past. This minimalist style helps you see the market story without all the noise. It reduces confusion, speeds up your decision-making, and keeps your analysis objective. You're trading what you see, not what you think or hope will happen. Simplicity is clarity. And clarity leads to better trades. We've covered strategy and risk. But what about the battle that happens between your ears? Successful trading is arguably 80% psychology and 20% strategy. The Charles Harris trader content often emphasizes mastering this inner game. It's about developing unshakable emotional discipline. This means controlling the fear that creeps in after a string of losses, preventing you from taking the next valid setup. It means taming the greed that can make you overconfident and reckless after a big win. And it means cultivating the patience to sit on your hands and do nothing when the market isn't offering any clear opportunities. So many traders abandon perfectly good strategies simply because they can't handle the emotional pressure of a drawdown. By developing self-awareness and discipline, you learn to execute your plan consistently, day in and day out, regardless of how you feel. Your trading plan is your boss, not your emotions. Another core belief is that learning never stops. The market is a dynamic, constantly evolving environment. What worked last year might not work next year. A true professional is always a student. This means you should be rigorously reviewing your past trades. Where did you make mistakes? Where did you follow your rules perfectly? Keeping a detailed trading journal is essential for spotting patterns in your behavior, both good and bad. It also means staying informed about broader market conditions and macro trends that could impact your assets. The goal isn't to chase the newest, shiniest strategy every week. It's about mastering the fundamentals and continuously refining your execution. Your growth as a trader is a direct reflection of your commitment to self-improvement. So why does this approach resonate so strongly, especially with beginners? It's because it's realistic. It doesn't promise instant riches or a life of leisure overnight. Instead, it encourages small, steady progress. It teaches a profound respect for market risk from day one. It frames trading as a long-term skill you build, like learning a musical instrument or a new language. This realistic outlook helps new traders sidestep the most common pitfalls, like overtrading out of boredom, revenge trading after a loss, and setting completely unrealistic profit goals that lead to disappointment and burnout. It provides a solid foundation built to last. In today's wild markets, filled with algorithmic trading, unpredictable news events, and extreme volatility, are these principles still relevant? Absolutely. In fact, they're more important than ever. Discipline, risk control, and simplicity are timeless advantages. They provide a sturdy anchor in a stormy sea. Whether you're trading stocks, Forex, cryptocurrencies, or commodities, these fundamentals cut through the noise and give you a framework you can rely on, no matter what the market throws at you. To wrap it all up, the Charles Harris trader concept represents a professional, grounded, and businesslike approach to the markets. It's built on the pillars of discipline, robust risk management, and psychological strength. While no single method can guarantee success, the principles associated with this style offer a powerful framework for anyone who is truly serious about trading for the long haul. If you're looking for sustainable growth rather than a shortcut to failure, adopting these core ideas could be the most important step you take on your trading journey. Thanks for watching. If you found this breakdown helpful, make sure to hit that like button and subscribe for more content to help you become a smarter, more disciplined trader. Let me know in the comments which of these principles you plan to focus on first. See you in the next video.